And we are live. I'm not James West. Brandon Colwell here with you, and we have Stephen Misener, what will we choose on the very end? We're going through so many titles. This guy can do so many different things.
Capital Markets Advisor for Midas Letter.
Capital Markets Advisor for Midas Letter, only Midas Letter.
Yes.
Welcome to the show.
Thank you. My pleasure.
Yeah, always love having you on, but also when we get to talk to you in an interview as well. It's like you've been around for a couple of years in the market, eh?
Got a few years on me, a few miles, yeah.
Yeah. What have you been noticing this last little while as we're about to start up the show?
Well, I mean, pretty nasty sell-offs at the end of last year. Obviously, many negative factors on the market, and previously, whatever was going right seemed to be the driving force in the markets, and then in November, December, whatever was of concern seemed to be the overwhelming. And keep in mind, the market is always a tug of war between, the raw emotion of greed and fear. And fear is a greater emotion than greed. Some would argue, but that's pretty much the truth. That's why the sell-offs are so aggressive. And then you have program trading that creates forced liquidation. Yeah. So that was some of those 700-point down days that make your heart skip a beat, and are very happy. But
a lot of them too. But
you can argue as well that while the sell-offs are brutal and aggressive, that we had some level of capitulation selling, which is a word to describe those which have to sell. And for those who didn't have to sell and didn't respond in the sell-offs, we are now seeing some recovery now. I mean, it's a slow and steady. The sell-offs are aggressive, and the recoveries are slow and steady, but we're okay with that.
Absolutely. Well, before we go even more into that, we're going to be showing everyone, all of our viewers right now, what's going to be on the show today. So let's go ahead and get that graphic up there, because we will see what we have in store. We have the headline news. Ricky is going to be coming on, letting us know what happened today. We have William Ying, CEO of Benchmark Botanics. He'll be joining us roughly around 3:15 via Skype. That is live. Alan Brochstein, for many people who are looking at cannabis, you know exactly who he is. 420 investor, new cannabis ventures, and then we're going to be posing questions and going through other things like the CBD and seizures. That was actually, I watched that earlier. That's a fantastic little clip there. Stay tuned for that one. And then market close. We're going to go through the chart analysis, how did the day go. The US is closed right now, but we still have Canada open. And then lastly, viewer questions and hopefully panelist answers. Okay. Well, let's see. Depends what you ask.
Absolutely.
But we were talking earlier specifically about the U.S. indices. I know we started off and you were saying, there was choppy waters to end last year. And then we had the cleanup crew, or whatever they called themselves, the plunge protection crew, I think it was, where on Boxing Day they came out as the biggest increase in the Dow point-wise in history. But ever since, it looks like we've been somewhat okay, but I don't think people are too convinced just yet. What are you seeing in the American indices right now?
Well, that was that 1,000-point day before year-end, which was made some recovery. Well, in December, we had the S&P down almost 16%, which, in the intra-week lows, and we've had about 11% recovery. But remember, that's not apples to apples, because the 11% recovery is from a smaller denominator, so it's not quite as big. Other factors of note, there's about 30, I'm not certain, but around 3,000 to 3,200 actual listings on the New York Stock Exchange. And just over 1,600 of those hit 52-week lows in December. So that's about half the market hit 52-week lows in the month of December. Now, that shows that the negative side and the sell-off was a very wide breadth, and that the indices that were holding in were being held up by a fewer and smaller number of stocks. Now, that all negative aside, I think there are some positives coming out slowly, and as we said before at the opening here, recoveries tend to be slow and steady, but that's okay, because money's nervous. It comes back to the market. Let's buy a little, but I'm not completely convinced, says the investor, so they keep some cash. Yeah. Getting to cash was a nerve-wracking thing for them, but now the the greed or the let's be more constructive and say optimism is coming back in, and people thinking, well, I don't want to miss the opportunity because long term there are some attractive values. And that's the other thing, is that there are some better values in the marketplace.
Absolutely, and we're going to continue on that theme as we continue our show today, coming back to that, because it's an interesting one to think of if people are asking themselves, should I start getting some of my money back in there? We'll be going over a couple other examples and just talk about more, but first, we're going to give it over to Ricky for the news. What happened today?
Thanks, Brendan, and here are the headlines moving markets today. Canopy Growth Corporation has made key European progress in the UK and Poland, where its medically focused business, Spectrum Cannabis, continues to build a cannabis production and distribution network. In the United Kingdom, the company has formed Spectrum Biomedical UK, a new company focused on providing access to cannabis-based medicinal products to UK patients with severe unmet clinical need. In Poland, Canopy Growth's Torun-based team, Spectrum Cannabis Polska, successfully completed its first import of medical cannabis after completing a regulatory approval process to have the product assessed and approved for sale. OrganiGram Holdings Inc. has entered into an agreement with 1812 Hemp, a New Brunswick-based industrial hemp research company, to secure supply and support R&D on the genetic improvement of hemp through traditional plant breeding methods. 1812 Hemp is focused on further developing a line of Canadian cultivars of high CBD-yielding hemp for the Canadian climate. Under the terms of the agreement, OrganiGram will have access to a secure supply of hemp flower, which contains significant levels of CBD. ICC International Cannabis Corp announced that further to the signed letter of intent with Wayland Group Corp, the companies will begin integrating its extraction and distillation processes and finished dose manufacturing of CBD products for the European market. Wayland's 125,000 kilogram supply of CBD flowers for extraction will be processed in International Cannabis's Polanabis operations and finished into distillate. Leveraging Wayland's patented Vesisorb formulations, Cosmos Holdings will then manufacture finished dose CBD products, including oral tablets in its EU GMP certified facilities in Greece. Zenabis Global Inc. announced that through its subsidiary, Bevo Farms Limited, the company has entered into a credit agreement for an aggregate of $51 million in credit facilities with a major Canadian chartered bank. The facilities are available as a $46,700,000 term loan, a $2 million revolving line of credit, $2 million in hedge funding facility, and $300,000 credit card. Village Farms International Inc. announced it has filed an application to list its common shares on NASDAQ Capital Market under the symbol VFF. Village Farms common shares will continue to be listed on the Toronto Stock Exchange, also under the symbol VFF. Chiron Life Sciences Corp. announced today that the company has closed the previously announced MOU with Daycan, holder of Chile's first medical cannabis cultivation license. This agreement expands on Chiron's multi-jurisdiction cultivation strategy, securing access to cannabis cultivation for the company's use in Chile, participation in clinical trials, and access to commercialization products to meet the needs of a market of 1.8 million patients across the country. And that's your news for today.
And thank you for that, Ricky. Well, there's the news for today. We're all set and we're all cut up now. We're all cut up, or they're all cut up. We were watching it this morning still.
Indeed.
But it's nice to see things start coming out and news releases actually doing something to a stock again, especially if it's a good news release. Mm-hmm. Because for the longest while, we'd get something and nothing would happen. Yeah. I don't know why, but.
Well, people were cautious to be gentle, or they were afraid to be something more, to put a different perspective. And also, they just wanted to get 2018. I mean, the last quarter was tough, and get the tax loss selling over and people getting stocks off the books. Mm-hmm. And now it's a new year, and we'll focus on fundamentals. We're into a more of a stock picking market, though. I mean, where in a sector like cannabis, where the money came in a large wave, and you can see such great long-term optimism and development in Canada and in around the world, all the stocks had a favorable bias on the upwards, on the upward side. But now it's a bit more after this correction, people will want to see fundamentals and focus on individual companies, or as they say, stock pickers market.
Yeah, and I couldn't agree more when it comes to not even cannabis. You know what, we talk about cannabis loss, and it's true, because with cannabis people are really trying to find those winners. But I think even when you're looking at the FANG stocks and you're looking at technology and mining, it's not moving the same way as it was before. People are starting to realize that, wait a second, this is trading at 100 times price, 100 times earning or 50 times earning. What's going on here? How didn't I know that before? I think it's kind of caused people to really be like, okay, let's take a second and let's really dig into this company. Am I investing because of speculation, because I think they're going to do well? Or am I investing based off sound fundamentals of some sort to go off of? And I think we're seeing that now.
A little bit, and the higher rate structure that we have now, and hopefully it doesn't continue much from here, that's drawn a little bit of money off the table. I mean, the Canadian banks are issuing preferred shares now. The last two deals, I think, CIBC and TD2 that I saw recently were at 5.2% for, I think, 5-year retractables, and say 3 years ago they were doing them at 3.7, 3.8, I think. So that incremental move, and remember, a dividend off a Canadian company has got some tax advantages as well. So that margin means that at the margin, some of the money may go to income components. But again, broader equity markets have come off. They're better value, and clearly I think slow and steady, I think the recovery is probably in place here.
Yeah, and it's nice to see, because you saw the Fed and the Bank of Canada, both of them went a little bit dovish on rates, at least for this term. We'll see what happens when they meet again. So that was nice to see for everyone who was panicking, because not only is the stock market crashing, there's trade wars, there's all these different things, but now you're also aggressively cutting off quantitative easing, but also increasing the rates back to a more normalized, they always say 3 to 5% is where they want them. It's nice to see a little bit of reprieve. People can breathe, but it's also nice to see, funny enough, I know everyone just wants to see something go up, up, up. I'm actually okay with seeing things go up and then find a little bit of a base and go up and find, if you're just gonna spike up, everyone will just it'll spike right down again. So I hope this is a little bit of a recovery.
I think so, and just looking out on the trade front, it looks like March 1 is probably a key date for the Chinese-U.S. From what I'm been reading and following, is that I understand in early to mid-March there's a big political convention or conference in China. I'm not sure what it's called, but it seems likely from the pieces that I looked at that the pressure will be on from the Chinese side to try and cut a deal with the U.S. on the trade front for March 1st, so they can take it to their convention and kind of show that it's resolved. So that seems to be a key date that people are watching, and that will probably be constructive for markets if a deal can get done by March 1st or prior to there.
That's an interesting point, actually. That's the first time I've heard that brought up. I like that.
The other thing is that China I think they reported preliminary GDP for last year, always subject to revision, but I think it came in at 6.6, which is a staggering number, but is the lowest number in 28 years. Some skeptics say that the number's perhaps been exaggerated. I don't really know, but I wouldn't know, but it is the lowest growth number in something like 25 years or some big number. I think it was a couple of basis points higher, 20 basis points higher the previous year. But people are keeping an eye on slowing in China, and if this is temporary because it's trade fight related, or if it's something different.
Yeah, and it's one of those ones that's I've been monitoring it myself, because economics has been something that's always fascinated me, and people have been speaking about how this gradual but continuing decline in Chinese GDP growth. China was in double digits for the longest time, and when they were doing that, a lot of their demand was with steel and with copper and all these things that they're building infrastructure, building homes. Now that they're going away from that, and that's actually really slowing down, it just makes you wonder. We just had a terrible year on the venture. We had, exploration companies for the most part did not do too well. I wouldn't say that this is directly related to it, because there's so many other factors going on, but you got to think, is the demand for these precious metals, which is primarily what's on the venture, or a huge chunk of it, is that lack of demand starting to affect the bottom line of these metal prices? If people are thinking, you know what, next year it's going to keep going down. Next year's going to keep going down. I wonder if people are putting that into it, or if I'm just making some up in my head.
Well, again, a tug of war on pricing of metal, say copper, which is a key base metal, obviously a key base metal in infrastructure building and also electric cars and hot water heaters and piping and the whole thing. But a stronger U.S. dollar is negative for all commodities, and the rising rates in the U.S. have led the U.S. Dollar stronger, and it is also it's the biggest economy, and it has strong GDP growth still. So that's led to strength in the U.S. dollar. Bad for commodities. On the other hand, for something like copper, the average, remember these are consumables in mining, and eventually the major mining deposits burn off, and so that can be more bullish long term, that these copper deposits, just for example, have to be replaced, and the grades that have been getting mined from 1 or 2% copper 15, 20 years ago down to maybe below 1% copper on average. The grades are getting thinner, which means costs are going up, which means in the end that prices for copper ultimately have to go higher. Yeah. But this is the kind of push and pull from commodity markets, and of course China being a major consumer.
Absolutely. Well, switching gears really quickly over to cannabis, because we were speaking earlier that we were going to be having the CEO of Benchmark Botanics on, and he is on right now, William Ying. Welcome to the show, and thank you for coming on today.
Thank you for having me. Good afternoon.
Absolutely.
Good afternoon.
And William, if you don't mind, just for our viewers who are getting caught up to speed or may not have heard your company before, who is Benchmark, and what are you doing in the cannabis space?
Benchmark is currently listed on the CSE, and we are a licensed producer, and we received our cultivation license in October 2017, and last year we have received the sales license, and our main production facilities is in Peachland, British Columbia, and which is indoor growing 14,000 square feet indoor housing, and we are currently on the 20 acres owned land, and we are looking at the phase 2 expansion. And on top of that, our second production is a greenhouse facility is under construction. It's at Pitt Meadows, British Columbia, and it's about 5 acres land and 4 acres of a greenhouse space.
Very nice. And you've got your production facilities that are currently growing, and you're building it to increase it as well. When it comes to what area you're attacking in the cannabis space, are you going to have the best flower? Are you going into oils? Are you going to some sort of derivative market? What sets you aside from the rest of the competition?
Oh, yes. Our vision is looking at the cannabis therapeutic benefits, and which is, for example, pain, stress, depression, or sleeping. And any products we derive from them, this is under our development business plan. So it can be flour, can be oil, but we thought that the high margin is nutraceutical, and if economically making sense, we are going after this pharmaceutical.
Gotcha. Yeah, sleep deprivation is definitely going to be a big one, I think, when it comes to cannabis, where there's a lot of companies, or I shouldn't say a lot, there's some companies going into that and trying to really figure out what cannabinoids are the best ones for that, how does that work, because I think a lot of people will turn to those types of solutions when it comes to whether it's sleep, whether it's pain or inflammation. They're looking for a non-opiate to use, so it'll be very interesting to see where you can go with that.
And I believe the majority of the consumer is looking at non-so psychoactive benefit, and the awareness. And this is our tagline: is health awareness. So, and I believe this the market of consumer is much bigger than adult use for recreational. And we are looking at which product line and what segment will be the most profitable, and whether it's a Canadian or overseas. This is always in our strategic planning department.
William, congratulations on attracting the Honorable James Moore to your board of directors recently. I think that's quite a coup for you, and he probably had many other opportunities to join in this particular corporate space. So I think that's quite a kudo for your company.
Oh, thank you very much. Yes, I believe this Mr. James Moore, Honorable James Moore, come on board with adding great benefits and reputation to strengthen our board, and also his background and policy vision will actually bring us to the ever-changing cannabis policy and regulation. And we trust him, and we like him to bring each time there's a policy, there's a direction, and his network will greatly benefit our strategic development. And then thank you very much. And I believe that our shareholders see that and really feedback positively.
I think it's also reflective of your maturing company as well to attract greater members to the board as you grow and become a larger entity.
Yes, yes. Execution is one thing, and throughout the year, we're working on our fundamentals, and because we execute the fundamental bit by bit, that actually our direction and vision fits Mr. Moore's and other interesting employee and staff from various segments and come to join us. And you probably will see more and more coming up. I will let you know, and everybody knows our progress and execution.
Mm-hmm. Yeah, and William, you maybe the market's responding to it over the last couple of days, or at least anticipating it, because your stock has been on a wild ride since it first began, and it seemed to have found a floor around the just above 20 cents or so. But these last few days, you've had a really strong upswing in your stock price. Is this because of the different things that you're doing recently? What do you think is behind the increased volume, but also the increased share price? It's almost doubled in the last week or so.
The double is versus what we experienced the last September. I think the general market and what's happening between US and China, overall the market is weak, and the people are trying to rebalance their portfolio. I agree. And I believe that before the last September, so that's what we usually trading at. So this month, returning to the previous level that we feel that's normal, and I think there are a lot more room to grow, and Mr. Moore's participation to our independent director definitely will help and give the confidence to the shareholders.
William, what kind of message are you, just to elaborate further, what kind of message are you offering to investors for your outlook corporately for 2019, if you could expand on that a little bit for us?
A few points, and our production capacity is gonna expand, and we already have a few harvests, and we have inventory, and we are able to sell to our other licensed users, and we are developing new products, and that part is definitely will give us revenue momentum, and our initiative to outside Canada, for example, the Europe, we have established a few partnerships in Europe, Spain and Germany and other places. And I think the future is brighter, and our execution will prove it's going to be a good company at this level. This is great value for this great value at this stock price.
Great, thank you.
No, yeah, I appreciate it. Yeah, because you know, a lot of investors right now, we were actually just speaking just before you came on the show, the importance of really finding quality companies, finding companies that are, yes, they're doing marketing and all that. You need to get your name out there, but are really focusing on the core fundamentals of their company, making sure that they're not just okay for today, they're okay for, you know, Q2, Q3, 2020 and beyond. And it sounds like that's what you're planning on doing over the next little while. For investors throughout the next little while, I know we just went through the message that you're sending to investors, but if you were to pick one thing, what are you most excited about your company in 2019? What is the main focal point?
Probably will be our sales and our new facility completion and our capacity increase. And we have a steady and quality product to present it to the general public.
I appreciate it very much. Well, William, if people were to look into more, I mean, probably about 15 minutes or so we were going on here, but if they wanted to spend some more time and find out all the different things that you're doing, where can they turn to? Website, investor presentation?
Oh, well, your website definitely yours. Midas definitely provide a very timely and accurate information to the general public. And then they have a few, and you know, I always go back to Health Canada, and there's up-to-date regulation updates. And the other, a few new cannabis ventures, marijuana business, they are all great information source. And the problem is too much, and I hope everybody have know. And so that's why we go back to Health Canada's website, and any changes, and we know and immediately and where to make a right judgment decision.
Absolutely, and for any investors who are looking for a little bit more as well, you can find them on the CSE. BBT is the ticker.
Yes, correct.
Well, thank you very much for coming on the show. We appreciate your time very much.
Yeah, my pleasure.
Nice to speak to you, William.
Thank you.
Perfect. I love it. I love when a CEO or anyone from a team will take the time and have conversations like this. A lot of the times investors will be in the chat rooms, they'll be asking us questions. Can you bring this person on? Can you bring this person on? Because you've been around for a long time throughout the progress of just what markets have turned into, social media coming into play, all these different elements. You know, I can remember just a few years ago trying to find information on some of these cannabis companies and barely being able to find anything. Now we're able to pull them on to a Skype right away and ask the questions that you want. I appreciate it very much. It's the access to information from all the social media platforms and disclosure issues that are leveling the playing field in a great degree to allow individual investors to get information the way that institutional investors have historically been able to extract the information from an analytical perspective. Yeah. So that has leveled the playing field. It also has led to a little more volatility in the markets, though, because information is distributed in such an expedited fashion. So that is the offset, is that the speed with which information is available on a widely disseminated basis can also lead to volatility, which no one complains about volatility on the upside. When stocks spike on big volume, they just don't like it on the downside. Yeah, and you know what, that's something that I spend a lot of time thinking of when it comes to high frequency trading, when it comes to how social media is getting a ripple effect of what would normally cause an effect. And what I mean by that is, you know, if the Bank of Canada came out and we all thought that they weren't going to raise interest rates, and they do end up raising interest rates, obviously that's going to cause a ripple. It was unexpected. But what I'm really starting to find is that with social media, that ripple is catching another ripple and another ripple, because first it's starting to get into your mainstream, you know, whether it's BNN, whether it's on this show, whether it's in the newspaper, but then people start talking about it on Facebook, on Twitter, on Instagram. I'm finding stuff. It's really spreading it, and unfortunately, when it starts going to social media, I think a lot of people on there are still retail investors. I think it's safe to say they probably react a little bit more emotionally than, say, a seasoned veteran like yourself, somebody who's been around for a long time. You understand these things happen, but someone all of a sudden sees something go down by 5%, they start panicking, they all start selling. It's like this extra wave of panic selling. Am I correct here, or am I just spitting something out and see if it sticks?
No, I mean, the 1987 crash in the market was a pretty devastating knockout to stock markets around the world, and there wasn't anything related to social media back then. So markets go in cycles. So in that sense, you could say that things haven't changed that much. In terms of the rapidity or the speed with which information is disseminated, that can lead to a more aggressive stance in terms of a sell-off, because maybe the calm money or the patient money isn't standing there with the bids to take all the shares that might come so quickly on the market in an individual stock sell-off or in a broader market sell-off. But again, it's good that the information's out there. It's good that everyone has a chance to get at it in almost the same timeline, and that is more fairness to investors across the board, even if retail investors may possibly be more emotional. But I can tell you that even as an institutional investor, it's hard to fight the emotions sometimes.
Yeah, we're all human, right? We're all human, and that just goes to show, though, why a network like this, like right here, Midas Letter, the network that I help do as well, Follow the Money Investor Group, New Cannabis Ventures, we'll be talking to him later. These are all made so that you can find information quickly and act upon it. You know, you don't always have to be connected, but it's nice when you can look at your phone and quickly get like a notification. Oh, this came out, or this happened. Because if you're not, you shouldn't be trading. You should be investing. So you got to be careful there when it comes to. A lot of people think all of a sudden they took one TA course and I'm a trader now. Well, are you staying in front of your computer all day? And I'll ask them, do you have L2? What's L2? You're not a trader. I'm sorry, you're not. So, but a lot of people are doing this, and unfortunately they're getting fleeced. So you just gotta be careful. But the more you're in community, I see people in the chat room right now, very active. I've seen all your questions, by the way. We just had a lot of good conversations going on. I don't mean to, or we don't mean to be ignoring you, but I see our Midas letters in there answering some questions as well. But this is where you learn. You learn, you just pick it up each day. It doesn't come overnight.
It's a cumulative thing, and if anyone knew, I mean, there are some very, very successful long-term investors, but you're always learning something, and I mean, that's part of maybe the joy, but part of the challenge, and the market will always perplex most people at some point.
Yep. Sometimes I stopped even trying to guess. I'm like, oh, it's definitely going to go this way. The exact opposite. So you never know. But just like you never know, you never knew this, because I think it's only been in my year, not yours. We are going to Alan Brochstein, New Cannabis Ventures, but just before that, live, we have James West on the line right now.
Oh, fabulous. James.
Hey boys, how's it going?
Good, how are you?
Fantastic, some people say.
Yes, well I'm good now that I got off a plane that sat on the tarmac for 2 hours waiting to leave in Toronto. Air Canada strikes again. I can't remember the last time I took an Air Canada flight that left or landed on time. Yeah. And I've not seen it out.
Are we all shorting their stock right now then? Is that what we're going to do? No, I don't know.
That's another story. We'll get there one day. But anyways, I was listening to your comments about the hair trigger investor, the emotional investor, the fear of missing out investor, and I thought I would add the reckless gut instinct investor who's going into the market. The trick is, in my view, never execute a trade without a plan on how you're going to get out of it, an expectation of what it's going to do, so that if it doesn't do what you expected it to do, you have a plan to get out of it right away with a minimum of loss. So many guys, buy stock on a hair trigger instinct, and then they don't really have a plan. They don't think, okay, this stock should double based on earnings that are going to come out double-digit Q-on-Q, or based on a drill program that has a good chance of resulting in a discovery. They just buy the stock because somebody calls them and hypes them on it. They get all excited. Fear of missing out creeps in, and next thing you know, they're deep in it. And I've got to say that I have been guilty of that so many times, and but you know, it's just a matter of time until you kind of get this heavy leather hide, and as soon as somebody calls you up with excitement in your voice, you're like, okay, here it comes. Here comes the pitch from Pittsburgh designed to sew me up.
Well, it's like if you buy a stock, James, and it goes up, well, that's a good investment and you made a profit. If you buy a stock and it goes down, hopefully not, but if it goes down, that's called tuition.
Well, I've had lots of tuition. One might say I'm overeducated.
Yeah, a lot of remedial classes for all of us.
Yeah, you bet. So I came to Vancouver because I am working on a project for the Bullet ID Corporation. Now, this is a private company that is in the midst of its second, what we would call Series A. The company is expecting to go public at some point in 2019, and I'm obviously an investor in the company, but this is a really neat company because what these guys do is they do laser etching onto the shell casings of ammunition, and not just bullets, but everything up to large-scale shells and munitions like missiles and other deadly armaments and artillery. And so for government-run military organizations and police agencies, the ability to identify where their ammunition is going when it leaks out or is stolen or sold on the black market is of extreme interest. So, for example, the Mexican National Army is planning to incorporate the system into its national munitions procurement chain because the cartels are routinely finding themselves stocked with government ammo, and wouldn't they love to know where it came from? I mean, the whole idea of stemming government leaked ammunition to criminal organization begins with knowing where it is, when it was made, how it was sold, what was the chain of custody. So that's the great thing about this system, is it laser etches barcodes onto ammunition and then uploads the identification of every single shell into a cloud-based inventory control system that lets authorized users determine what the chain of custody is, right from manufacture to the point where it leaves the barrel of a gun. And so if an authorized user, you know, is robbed of his ammunition, then at least the police have a last known point of legitimate possession to start from, or the Army does. And so it's really looked at by national armies and by police forces as a way to stem the inability of ballistics measurement to result in criminal convictions in homicides on the policing side, and on the military side to put a serious dent in the ability of black market dealers and bad actors within the Army supply chain to sell it on the black market. So it's an exciting new technology, and that's why I'm here in Vancouver.
It does sound very exciting, James, and it sounds like there's just a huge market opportunity for this company going forward.
Yeah, there sure is. There sure is, and it will be at some point it will be a public opportunity, but you're going to have to stay tuned for that. I wanted to ask you guys, what's going on in the cannabis market here?
You know what? It's funny. Some of these are actually flying right now. Obviously, American markets are closed. Martin Luther King Jr. Day. So it gives us Canadians to see if we can get any movement. The volume, not there. Movement, a little bit. If you look at Aphria is currently up 10.57%. So they're a double-digit mover. You've got Gene, Invictus. They just got a sales license today, actually, at one of their, I think it's their Delta facility or something on the lines, if my memory serves me correct. 11.3% rip. You've got Hexo. They've been on fire recently, and we'll look at the chart afterwards. It's really, really nice. They're up 8.5%, and then we got a couple other movers, but the volume's not really there. But you've got some people who are flying. Thankfully, no double-digit losses yet.
Remember that stocks don't need a lot of buying to go up sometimes. You just need people to stop stomping on them by selling and selling and selling. So the selling that had to happen in December for year-end, tax losses, forced liquidations, kind of animated emotional selling, that's hopefully all behind us for now. And so when these stocks have a chance to breathe and there is some buying interest and the big volumes of sellers dry up, then you get these lifts in the stocks from these depressed prices. So that's a very positive sign out there.
Yeah, you bet. I would point out, I had a conversation with a guy on the plane about, he says, well, why are the cannabis stocks suddenly on fire in Q1 2019, way in excess of the broader markets, when everybody at the end of Q4 2018 was saying the market is oversaturated, the rate of new opportunities going public in the cannabis space is exceeding the rate at which investors are coming into the market. And, I pointed out to him that the reality is that the Canadian Health Canada licensing system has slowed right down in terms of licensing new entities for distribution of licensed product. We know that in the recreational space, that for now, the number of players in the recreational space is finite in Canada. Across the United States, where in many states, California, Oregon, Washington in particular, excessive supply is causing price competition at the commodity level. And so the states are starting to pause in their licensing. And don't forget, the important thing is we hear all these analysts raising the banner of the multi-state operators in the United States and how their time has come. Well, fair enough, but I would point out that the multi-country operator has exposure to far greater market size and state operators combined. Europe is 340 million people. Latin America is 540 million people. All of the United States, if every man, woman, and child lit up tomorrow, that would be 320 some odd million people. So yes, the multi-state operators are, arguably cheaper than their Canadian peers on a balance sheet basis. But I got to think that America being America, the price competition, thanks to saturated supply at the commodity level, is going to limit the upside of these companies in the longer term, because there's much more of a propensity to over license capacity in America when it comes to commodities, and may the best man win, whereas in Canada and other countries it's a little bit more nepotistic, shall I say. Governments tend to be a little tighter on the granting of licenses when it comes to something like a commodity like cannabis. I think that all of this upside that we're seeing in the market, essentially the capital expansion that's going on right now in the cannabis space, is large capital pools around the world sort of looking at the whole market, saying, well, the availability of supply is slowing down on the international stage by virtue of the fact that Canada has slowed right down on its licensing skills. Americans are not in a position generally to participate in the international market. Therefore, the rate of uptake on the investor side across the world is happening faster than the rate at which supply is increasing, arguably. Now, there's nobody who's got a complete 50,000-foot bird's eye view of what's going on globally with all the data in all the countries, all of the demand metrics relative to supply and future supply. So even the published data by the handful of consultancies that are publishing that data is largely based on guesswork or limited data based on the license producers. So regardless, there is nobody, no investment banking analyst, there's no cannabis industry consultancy that has a total wraparound view of what's going on in the world or even in the individual markets. So I think you got to discount that, and you've got to take a step back and look at the volume of funds coming into the space globally relative to the amount of capacity that's being licensed globally. And if there's a discrepancy in the rate, for example, I think what's happening now is supply licensing is starting to slow, while investor stampeding into the space continues unabated, and arguably the rate of investor uptake is increasing. So, you know, for the people who are the Chicken Littles in the room and are going to cry, sky is falling, the bubble has burst, the party's over, musical chairs, find a chair, get out, you know, you're going to miss the boat. And it's been nice knowing you. But the rest of us are going to continue to party like it's 1999.
Well, you got a lot of points in there, and I agree with many of them. The one that I think is huge, but I'm going to go back with all the ones I do agree with as well, is that United States, funny enough, I think that's going to be a massive network, but I think it's because we can better guess it. And when I say that, it's because with these states, we know how many people in that state, it's legal there, they're growing, so that's fantastic. What Canada, and like you pointed out, what Canada has positioned itself as is going to be the global leader. And look at all of these countries that are allowing medical cannabis to come in, things like that. They're allowing imports to come in before they allow their own countries to be growing it themselves a lot of the times. And who do you think they're going to be exporting with? Or who do you think they're going to be importing from? And that's where I think Canada does a really good job. When it comes to our how we're able to market this, the regulations, all that kind of stuff, I think we're really dropping the ball there. And if you're listening to me, Trudeau, come on, buddy, we got to get this going, because this is absolutely ridiculous at some points. But what they did do very well is setting them up on a global stage where they can be exporting, and you cannot overstate the importance of being able to export this cannabis, because as soon as, yes, the Canadian market is saturated, we have more supply and demand. It'll probably happen sometime next year or the year after. But for all of that demand that we won't be having in Canada, there's an entire world that we can be exporting to. I don't think we run into a problem anytime soon.
Yeah, you bet.
I think a couple things that you mentioned, James. I think that, first of all, I think it is difficult to get a handle on all the global opportunities that are unfolding so quickly, but we will say that Midas Letter is a good source to get as much as possible as we try to all try to keep all the viewers and followers as informed as possible as things do unfold quickly. This is your source. And I'd say also that point you make, that in different countries where they aren't issuing licenses for various cannabis participation in the same volumes, I think those rarity of those licenses country by country will become very, very important valuation parameters for as you look at individual companies and countries for opportunity.
Yeah, definitely. Definitely. In fact, and then I'm referring to your resource industry conversation short ago. In Vancouver here today, it's the Cambridge House Resource Conference down at the Conference Center, which I didn't know about. And so I'm actually going down there at around 2:15 Vancouver time to meet our friends from Quote Media and to have a sniff around and see what's going on. I mean, I think there's a lot of people who shake their heads when they hear us old-time Canadian commodities hounds talk about the imminent bull market in metallic commodities, because, I mean, you got to admit, it's sounding like a broken record of many years' duration. But in the grand scheme of things, you know, big price movements in commodities don't happen in 6-month or quarter-by-quarter increments. They happen by decade. And so everybody from Eric Sprott and Rick Rule to the newsletter writer sort of ilk, and even some of the large fund managers of famed for their resource participation. In particular, I'm thinking of John Paulson and John Hathaway. You know, these guys have never wavered in their contention that the bull market, the secular bull market in commodities, was interrupted by the collapse of the housing market and the subsequent explosion of capital and credit as a result of quantitative easing and zero interest rate policy has made it almost impossible for markets to price commodities appropriately in the presence of a mal-regulated commodities futures exchange that trades many times the volume of metals available for mining totally in the history of the planet each day on a paper basis. So it's largely panned as the stuff of conspiracy theory by mainstream financial media, but that's primarily because they lack the depth of focus in the research to understand the macro moves that happen in metallic commodities over decades. And so I think we still we can't waver in the face of broad-based skepticism, especially when the converging lines of supply and demand converge so imminently on the timeline to demonstrate that this just can't go on forever. And I guess I'm going to go down to the conference down there at the Vancouver Convention Center, the Cambridge House Conference, and put my finger on the pulse of the temperature of the resource sector in the absolute womb of resource investing, which is Vancouver, and see what's going on. So I'll have that report for you guys tomorrow.
I think on that theme, James, it's interesting to note that we've seen the first bought deal in a long time, at least the first one that I'm aware of, come through the markets today. Company, an Australian producer, but listed in Canada, called RNX Minerals, and they did a substantial bought deal today. It was well oversubscribed. The stock is trading, 14, 15 million shares. I think the deal was at 46 cents. The stock ran up in near 70 cents, I think, 65, 70 on big volume. That, whether that's reflective of a turn in the market is hard to say, but it is noteworthy that a bought deal got done, and it was obviously oversubscribed, and it's trading big volume. I think that's noteworthy in the dedicated mining space today.
Yeah, you bet. Actually, RNX is a company I've been following heavily. I've bought into it a couple times. Famous for finding in an old nickel mine in, I believe it's in South Africa, if I'm not mistaken, a gold mine within a nickel mine. And the gold is extremely high grade at that, and to the point where they're taking out sheets of near pure gold from the rock. But RNX is a perfect example of a resource company whose structure has become so compromised by poor financings as a result of poor markets that, the total number of shares outstanding relative to the total value of that deposit, I don't care how big it is, the absolute performance of the shareholder who participates in a stock that does such a big bought deal, 46 cents, is limited by the continuing need to raise capital. And so I'm not attracted to RNX as a long-term buy and hold resource investor, because I don't think it'll ever be able to reflect the value of or deliver a performance that's worthy of the risk that must be undertaken. I think what's going to happen with RNX is they're going to spend that money on proving up a resource, which is one of the reasons it hasn't really caught on that well with the big institutions. And then I think somebody's going to buy it for a small premium to the market, which at 46 cents, and it's not going to go much further than 46 cents if you ask me, until they clear out a lot of this stock. Was it a prospectus offering?
No, it was a bought deal, so I think it's a pop issue. So I think separate from the fundamentals of the individual company, I just think it's noteworthy on a broader basis that there was substantial appetite, and there is substantial appetite, at least today, for that deal, and we haven't seen a bought deal in the junior or intermediate mining space for quite some time, and a bought deal versus a marketed private placement, which is more typical. I think that's noteworthy as well. That's what I think is the highlight message here, separate from perhaps the outlook for that company in particular. I think it's commentary on the sector today.
Yeah, you bet. Finally, I just want to mention on that note, you were talking about copper, and I'm going to tell you about a copper company that I'm invested in. And the reason I'm investing in it, they're not a client, I'm just putting cash into it, is because they have a couple of billion pounds of copper in California in a former mining district. If there's ever a state that needed a copper mine to put some people back to work, it is California. And this mine is... It's actually a collection of old former producing mines that have been put together Placer Dome explored it back in the 90s or 80s, I believe, and generated a 43-101 of over $1 billion to over 2 billion pounds of copper across all categories. But the historic non-43-101, so not to be relied on, but historic data from the collected sort of reports of Placer Dome indicate that there could be upwards of 4 billion pounds of copper present. And so, you know, the best time to position yourself ahead of an imminent explosion in commodity prices, which I'm telling you, as the U.S. dollar gets more baffed out and China, you know, continues to consume commodities, is nearing. Best time to buy commodities is when they're out of favor. And if ever anything was out of favor, copper's out of favor now. So Crown Mining, CWM on the CSE, is trading at the 8 to 10 cent range, and yet it has 4 billion pounds of copper, or 2 billion pounds, 43-101. Let's ignore the other 2 billion pounds. And in a state of California where, you know, they need to put people to work, and we know that the current administration of the United States is very much pro-industry, pro-American industry in particular. So I don't know. If the price of copper gets above $3, this thing could be a mine sooner than a lot of the other ones out there.
It's certainly a sleeper. There's no doubt.
Absolutely. Well, James, always a pleasure, my good sir. There is never a time you're going to come on here or be here and not have something to say that other people can learn from. So appreciate it very much.
My pleasure, Brandon. We'll talk to you guys soon. Have a great show.
Great. Have a great trip.
And we're going to go right past banter for a moment because we have a segment coming up. We're running a little bit behind, but for good reason. We've had some good talks today. That's why. So it's okay. And good thing is we get to do whatever we want. That's the good part about this. But cannabis is being able to use for the treatment of epilepsy. And we put a little video together showcasing that of Adamo has more on this because you need to hear this. You need to see this. This is happening now. This is what cannabis is going to help fix. Let's see what the story is.
My daughter is epileptic. She's also autistic. She was diagnosed with infantile spasms. At 3 months, we saw her have her first seizure. At that time, I didn't know what that was. It just was an odd movement. So we went to the doctor and got us into sick kids, at which point we noticed she was having massive epileptic activity. She was having like 20 to 30 seizures a day sometimes, and there was really nothing I could do. So they immediately started her on a bunch of, quote, first-line medications, none of which worked. Every time you fail a medicine, it's less likely that the next one will be effective. The steroidal therapies made her gain weight, didn't really affect her seizure activity, and can cause hypertension and things like that. I'm not anti-pharma by any means, but it occurred to me that there should be some research done and that maybe doctors were missing something. So I really wanted to try cannabis oil, and one of her doctors was kind enough and good enough to take all the information I had given him and read it and come to the determination that he didn't know if this would help her, but that was pretty clear it would not hurt her. So they signed a prescription for me. They were not able to give me information on dosing or interaction or anything else. So I took it upon myself to figure out how to make the oil. I made oil multiple different ways, had it lab tested, And then in late 2014, I started her on a high CBD cannabis oil. And lo and behold, she went from having, 20 plus seizures a day to none in a week. Home from school. At that point, I went back to her neurologists and I said, we need to do an EEG. She had probably 20 in the first 2 years of her life at this point. And we got the EEG done. There was no epileptic activity seen, and the hypsarrhythmia, which is the high voltage, very damaging epileptiform activity, was gone, was erased. So, it was, I don't like to say it was miraculous, but it was very amazing. And the fact that this was working when at this point she had failed, I think, 9 other medications, was awesome. Guinevere is doing things that we were told she might never do, and her path is unknown for the future, but so is everyone's. And in general, she's leading a really happy life. It changed my life profoundly because of that, and profoundly on numerous other levels. One being that I got involved in the industry, and I'm happily working for a licensed producer called Flower now. And I see a bright future in the cannabis industry because it's being more and more accepted as a viable therapeutic for many reasons.
And we're back, and I love those stories. Honestly, that's why I started investing and caring about cannabis so much, was seeing the properties that we can use it just on like hempcrete and clothing, and we can completely eliminate the need for paper coming from trees, because hemp has 4 times more pulp than trees do, and you can grow it in 5 months, let alone a tree that takes a year. So I love that. But on the other side, as I started diving into it a little bit more, the medical aspects for epilepsy, for cancer, for pain inflammation, for Parkinson's disease, it's remarkable. It's a crime that it's been a crime all this time to have cannabis and to do medical testings for it. I don't know why, but that's changing. I like stories like that.
And the future extraction of all the, I'm no biochemist expert, but the genome related to the CBDs and all the very targeted, specific medical applications are really going to, I think, surprise people going forward. And we're just getting some of the highlights now, like that recent piece we just saw. Yeah, absolutely. And we've had a few people on here who have really looked into the science of cannabis. Relivium sticks out in my head. Aurelio was the CEO when we were talking about the different cannabinoids and all that, because our bodies have an endocannabinoid system in them where we were actually built to take in cannabinoids. Like that's in our system. So we're actually vitamin deficient. We're going to look at this 10 years from now. Like, I'm not a doctor, so I could be completely wrong right now, but this is off what I'm reading, what I believe. We're going to look at this even 5 years from now and wonder, just like people say, oh, you're low in iron, you're low in whatever, they're going to look at you and like, you are low in cannabinoids, you're low in CBD, CBG, CBL. I really do think we're going to look at this and like, how did we not have this in our system all this time? But again, I'm not a doctor. Not a doctor. Neither am I.
So we just passed the 4 p.m. threshold for the first time since 9:30 a.m. Eastern time, that is. Both the Canadian and U.S. markets are closed. They're matching each other again. What happened? What happened today? Just really quickly going through this. Mining looks like there wasn't too much volume there. RNX closed 24% up. That was a really, really good burst they had there, the one we were talking about with James earlier.
Well, on the back of a big raise, that's a very impressive performance. Big volume, uptick from the financing. I mean, that's a very, very strong performance.
If we could throw my NDI up, if it's still working here, I've got the RNX chart up. Pay attention to this right-hand corner. Anyone who knows me now knows that I love saying this. This is what I've been trying to find in many stocks. We actually had Johnny Mack, who's on our FTMIG live show. He comes on every Wednesday to go through things. He loves watching these Bollinger Band squeezes, and that's exactly what we saw here. If you're looking at this right here on the right-hand side where my cursor's going, you'll see this is where a lot of people on Friday, actually Johnny Mack reached out to me and said, hey, this is starting, but I was away from my computer to get into it early. You see those Bollinger Bands, you see them starting to widen up, the standard deviation's getting farther now. You saw a little bit of an uptick in volume, thank you for zooming in there. And then it stopped right at its 100-day moving average. There's a little bit of a wick, it got just past it, and it pretty much closed above the Bollinger Bands, but right at the 100-day moving average. Well, look what it did today. That was a massive, we can zoom out if you don't mind. That is a massive growth, and look at the volume that was put up. On Friday, this was the most volume they've had in a long time. On Friday it was 4.9 million, and that was a lot, sorry. Today it closed off with, I don't think this has ATS by the way, but today it closed off with, my cursor won't work, 16.3 million shares traded. And I bet you once you look at the ATS, you can add on to that as well. That's a massive day for them.
Well, it is, and a day when the U.S. markets are closed, so it seems unlikely that there's a lot of international participation there. I mean, I don't know, but I don't know where the buying is, but to have been able to satisfy the raise for the company and have this kind of follow through and have this kind of 20+% performance, that's incredible all around for the participants. Obviously, several dealers were involved with the raise. That gives more muscle, more support to the follow through, and probably some prominent fund managers as well. But it is an impressive performance, and what does it possibly bode for other interest? Because when people see a performance like that in a stock, in a sector that's been a little out of favor, they're going to maybe follow through with that company and look to say, well, what's the attraction there? But they also will tend to look around and go, well, maybe there's another one that could wake up like this. Maybe there's a what's next, and maybe I'll try and play that before it has its big day.
Well, look at what GGI did, not in 2018, I think it was 2017, where GGI is a nickel play, Nickel Mountain, everyone was talking about it. It really burst out of everywhere, and that kind of sparked a lot of people where, you know, you've got other plays now when they're coming out sick, golden, you see good results come out and they start flying. But then we obviously went into that second half of last year, and that really came down. I think you're right. You know, it is nice to be able to see something come out, a bot deal time in the Canadian side of these markets, but to see a reaction like this. Now, I know American markets are closed. We'll have to see how the follow through is tomorrow, but it's just nice to see. It's nice to see. We'll see if this continues. But I have someone yelling in my ear, actually. There's a little plastic piece here, and we've been pushing things back and back. So we had one good conversation after the other. We can keep going for a long time, but there's someone we've been pushing back, and I'd like to say it's because we keep the best for last. And we had a really, really good talk with Alan Brochstein about the state of cannabis in North America, but we also kind of singled out the United States where people aren't really talking too much about. So why don't we go over there and see what Alan had to say. He's always been one of those people who always is in the know when it comes to cannabis. Let's see what he had to say for this time. Sir, how are you doing today?
It's good to be here, enjoying the holiday in the United States.
Yeah, I get a little bit of a day off. What is it again? Is it Martin Luther King Day, or?
It is. It's Martin Luther King Jr. Day. One of my favorite people. I have to admit, I didn't know that much about his life until more recently, but really an inspirational person.
Very much so.
I think he would have been in favor of legalization. Yeah.
Well, now it is. We're going to be talking about things from legalization on that day. We're also here with Steve Misener. We've got there's going to be three of us today.
Awesome.
Nice to see you, Alan.
Good to see you again too, Steve.
So, Alan, why don't we start off with the fact that just over, I believe it was the weekend or last week, you were at Benzinga, a huge conference. Yeah. How was that?
It was, you know, the bar was very high after the Toronto event last August, which was, many people said that was the best cannabis conference for investors yet, and it was even better this time. maybe being in Miami helped, but I think there were about 700 people, some great companies, both sides of the border, attendees from both sides of the border, and even beyond. I was standing there at a cocktail party listening to a deal get done between a Canadian clinic operator and a Brazilian company. So just lots of stuff going on.
Great networking at those conferences.
For sure.
I know that with James you've spoken in previous recent interviews about trends for 2019, but each time you go to a conference you're picking up new information. What are you? Did any trends kind of more solidify for you, Alan, this time at the Miami conference?
So I think there was maybe a little bit more of an American flavor this time, and at the time of the event in Toronto in August, we had some American multi-state operators or MSOs, but subsequent to the event, a whole bunch of them came public. So I think for a lot of people, including myself, this was a great opportunity to learn about some of these companies, and it's really interesting because if you go back a few years ago, the leaders in Canada were those that could raise capital. They were telling a story kind of on the come, right, and raising capital, and those companies have done really well. Those have actually become the leaders, and partially because they were able to raise capital, and that helped define what was a leader. Well, in the United States, these companies have a lot of revenue. They're already up and running. It's very different from the Canadian situation a couple of years ago. So I think a lot of people, including myself at the conference, had the chance to learn a little bit more about these companies and maybe some of the differences, as well as probably more similarities than differences. But one of my favorite parts of the event was hosting a town hall panel with Acreage Holdings President George Allen, Trulieve CEO Kim Rivers, and Steve White, who's the CEO of Harvest. And for a lot of people, this is really their first time to ever hear the voices of these people. And there haven't been a ton of interviews. We've actually done interviews with a couple of them at New Cannabis Ventures, but for a lot of people, it was really interesting. And these companies, they have different philosophies about capital allocation and about footprint and the race to be dominant in the United States. And I think investors need to appreciate, as we've been talking about, that the United States is a bigger and more promising market than Canada. It's also a little riskier right now because it's federally illegal. And I think investors are going to really benefit from getting to know the differences between these companies. I wish I knew who the winners would be. There's probably 10 to 12 companies that we'll consider the winners. Not all of them are public yet. Some of them are. But I think that was one of the most important parts of the conference.
I think another interesting trend at each of these conferences, the big Vegas conference in November and beyond, I think another interesting trend is not just the issuer side and all the innovations and new directions that the companies themselves are going in the space, but is the attendees on the investment side as the investor interest broadens, where maybe there's always been a lot of investor interest from a lot of quarters, but some certain segments of the more traditional investment pools of capital have been slower players for obvious reasons, history, etc., associated with the space. And I think the broadening of the investor interest, I think, is interesting to watch as the attendance kind of complexion changes and broadens over each conference as well. Did you notice some of that in addition?
Oh, for sure. This was indeed the case. So I'm always amazed at these people that come up to me and they tell me what they're doing. I've never heard of them before. There was one example of a I don't think they're a REIT, but a real estate lender that said, and she said they have $1.5 billion to deploy into the space. I'm like, do you mean that's how big your company is? She goes, no, that's how much we have for the cannabis space. And wow. They're just getting started. So that was an eye-opener to me. But so I also ran into somebody from Benchmark. And I think Benchmark may already have started to cover the space. On this side of the border, we don't have a lot of coverage from analysts. And Benchmark is like the middle tier. I hope I'm not insulting them, but they're not Merrill Lynch. They're, I think, the middle tier, similar to most of the investment banks covering the LPs. And they seem to be moving forward, rolling out coverage. And it's a little bit different here because in Canada, obviously, they're going for banking fees, and they can't really do that. So maybe they're just taking a longer-term view. But, I remember from my past life, Benchmark covers, mid-cap and small-cap companies and did a good job. So it was kind of exciting to see them. And there were a lot of examples of people like that at the conference, more ETFs coming, for instance. I was speaking to some people about what's going on there. So, yeah, it's a good observation. It wasn't just the company side. Some very interesting investors there as well.
Terrific.
Yeah, and I love the point that you were saying earlier because it's true. I mean, up until, 6 months ago, we knew cannabis companies in the United States were obviously there, and they were getting a lot of revenue. But I think this last half year and your ranking system on new cannabis ventures, you can go right on there and you can see it really coming to fruition. It's amazing how many of these cannabis companies that not many people were talking about earlier, you said some of them, Trulieve, Curalife, they're having some significant revenues coming in quarterly that are upwards of $20, $25 million USD. It'll be really interesting as you start seeing, maybe states start opening up or we start loosening a little bit on legalization in the United States, but just in general, as they continue to grow in Nevada and California and states like that. It truly is remarkable how big of a marketplace that they are in, and I don't really think that investors have clued into that. Like I know you have, other investors are trying to move some capital over there. I think people are still giving them, the second look or not giving the second look. Why do you think that is? Why don't you think that we could see, look at the revenue they're making, they're in California, that's massive. Why aren't we looking there yet?
Yeah, well, so I think you're right. Once I started putting that up on the ranking page, it was kind of an eye-opener just to see these big numbers. But what's even bigger than what's being reported now are the projected numbers. And I think a lot of people think they're bogus. But, and I'm trying to wrap my head around, how realistic these projections are. Some people say that they're a little aggressive, and they may be, but they are very big numbers. And I think right now when people are looking for revenue growth, there's some low-hanging fruit. It's pretty obvious that Canopy Growth and Aurora, CanTrust, Afria, OrganiGram, these ones that are operating in Canada that have kind of a hockey stick here as Canada's legal revenues or adult use revenues kick in, kind of obvious, but maybe it's not so easy to visualize that in the United States. And take for example, I'll pick a good one, Harvest, which they've gotten almost all their revenue from the Arizona market and some from Maryland. And now they have Massachusetts coming on, and they have Pennsylvania coming on. So for a lot of these companies, they actually have good visibility into store openings. What they don't know is exactly how those stores will do. So I think, investors, I've learned this, we're still a retail-oriented market. There aren't a lot of analysts out there putting projections on the U.S. The companies are issuing some guidance, though. And I think investors are going to be slow to get on board. They're going to want to see the prints. And I think right now maybe they're distracted a little bit by some of the big numbers coming in Canada in the very short term.
Alan, another trend that we're seeing evolving now is that a number of companies are coming with debt offerings as opposed to equity offerings. Now that may be easily reflective of the correction in share prices in the broader markets and in the cannabis space that we saw at the end of the year recently, but we are seeing more debt deals come to market. Would you care to give your views on that?
Yeah, I've watched this play out for a while. There's always been the convertible debt deals. The terms are getting better. There's now also obviously some fixed debt deals as well. And it's interesting to hear like Cam Batley talk about their perspective on the debt versus to hear some bearish perspective. Oh, it's dilution. And Aurora pitched this as like, we look at this as low-cost financing. And I was kind of critical of the Canopy Growth convertible debt deal when it came out, I guess early in the summer, because if you do the math, they're giving away a very expensive call option, but they also have the ability to repay in cash in both those cases. So I think it reflects the maturation of the market. We're actually seeing some debt deals get done in the United States as well. Interestingly, it's not bank debt necessarily. Well, it's not bank debt. So I think this is a positive for the overall market. It's nice to have these different capital structures. I would say, the convertible debt's not new at all, and for some companies, it's been a way of selling forward equity, and it's worked out because the market's moved in the right direction. I always caution people at 420 Investor to be just a little bit concerned because, like, for instance, I was looking at OrganiGram, which is one of my favorite companies, I'll say, and I was looking at it near year end with the depressed price, and I'm thinking to myself, wow, I really have to think about this convertible debt because unlike the Aurora deal that had a 5-year term from last week, I think that one matures in less than a year or something like that. It'll be within a year, and so it becomes a little bit risky. And the risk isn't necessarily insurmountable, but let's just make up a hypothetical. Let's say that OrganiGram was plugging and chugging along, and then the myclobutanol issue were to hit. Then that could be problematic. So I think it's when unexpected things happen that it might hurt some of these debt issuers. And the equity holders like it because, especially if the straight debt, it's not dilutive, right? But at the same time, it's very dilutive in a downside scenario because you risk, as an equity holder, having your company stolen from you by the debt holders in certain scenarios. So I don't want to alarm people, but it is something. There's no free money. That's the point I would make. And while it's good to see this playing out, it also can be risky. It can cause some churn in the stocks. Supreme has been a big issuer of convertible notes over time, and it's paid some off and issued new ones, and it's worked out really well. I've actually had some debates historically with John Fowler about it, and it's worked out, no doubt, it's worked out. But you can imagine kind of the price it may have taken on the stock. It's kept that stock less volatile, more stable is what I meant to say, as there's been this churn of the convertible notes converting out. So I think there's pros and cons, and everybody just needs to realize there's no free money.
Mm-hmm. Yeah. And on that note as well, I know you follow OrganiGram very, very closely. You have a relationship with their management team. I think it was earlier today, there was something coming out saying that the class action suit was going to move forward. But it's been almost 2 years now, and they've already suffered their share price coming down. It's recouped very nicely since then. I believe they actually just got their organic certification back, or at least the beginning steps of that. Do you think there's much in that lawsuit still? Do you think there's still something that investors should be a little bit worried about, or do you think it's smoke and mirrors at this point?
Yeah, I don't know. Honestly, my understanding of Canadian law is it's not like the U.S. If this were in the U.S., I'd be really worried, right? Because, what state is it in? What's the jury like and all that? But my understanding is in Canada, it's not the same thing. And they have their regulator on their side, which I think makes it really difficult. So if I understand the issue correctly, it's more about, was it fair that they were not given their money back and were just given credits? And so I think from an investor standpoint, this can be quantified, and yeah, it would stink to lose, $4 million or whatever the number was. I don't remember off the top of my head. I think that might be it, but it's not the end of the world. They have, tens, if not more than 100 million of cash. Some of it's committed, but so I don't think it's really an issue. But I'm not an expert in the laws. But my understanding of class action lawsuits in Canada is they're not like they are here.
No, nowhere near it. And it's been, we actually saw some Twitter posts, people saying, man, things really run slow in Canada when it comes to this kind of stuff. But yeah, and I was also reading the news, I think they said that their insurance covers their legal costs and possibly even if there's any type of settlement afterwards, it covers a large part of that as well. So that was the first time I actually read that. I didn't know that personally, so that's good to read as well if you're an OrganiGram investor.
Yep, for sure.
And if you don't mind, I'd like to actually go back on something because, and then Steve had a great question right afterwards. You were talking about low-hanging fruit. Have you ever, what's your exposure into looking into C21 investments, CXXI? I find it really interesting that right now in Canadian dollars, their market cap's, I think, around 40 or 42 million, but they just acquired those two companies in Nevada with like 23 million USD in their 12-month trailing revenue. And they've got two more apparently coming up. Is this one of those examples of a company that nobody is paying attention to, but they should be?
Okay, well, I'm going to confess I'm not paying that much attention to it, so you caught me on that one. I'm well aware of it, and I know they had an LOI to do something in Europe, and that kind of went away. Yeah. Honestly, I follow the market full-time. I know you pay attention to this almost full-time, if not full-time. Getting really difficult to stay on top of all these companies, and I've noticed a few of them coming out with very low market caps, and I don't want to let a diamond in the rough escape. So I'm definitely cognizant of the potential of that. C21 is not alone. There's some other ones that have revenue, low market caps, and have done some acquisitions or expanding into multiple states as well. And so I think this is a great opportunity for investors in general, not necessarily in C21, because I can't really say, because there is a lot that's falling between the cracks right now. And so there really could be. One that jumped out at me, Planet 13, had caught my attention. And, I was kind of aware of some of the positives and maybe one big negative about it. And the stock went from below $1. And the day that it was below $1 was the day that they announced their revenue, 2 quarters ago, I think. And I had to add it to my list at New Cannabis Ventures for the revenue ranker. I was like, oh, they made the list. And sure enough, the stock took off. It was like a 200% or something like that. So it kind of tells you that you can do your work on these companies, get to know them, and maybe when they show up on other people's radars, you'll get that big run. And I think the thing that's going to put them on people's radar is probably the revenue generation, not so much doing an acquisition, this or that. We've seen a lot of companies make these announcements about these deals, and then you look at their financials 1 or 2 quarters later, and the deal's closed, and it's just not that material in terms of what's going on. So to the extent C21, for example, is able to convert the deals that they've done into revenue, let's say of $5 million a quarter or more, that'll capture people's attention, that's worth your time looking into that.
Yeah, and I agree. I mean, I started realizing how many companies were coming in this. I used to know all of them, and now someone said, have you heard this before? No, I haven't. No, it's funny how this company, actually, I found out 4 or 5 days ago. Someone just randomly put it into one of our chat rooms, and I saw it. I'm like, okay, start looking into it. So they're out there. I agree. It's getting harder and harder, though, because there's so many of them. So it's that much more important to find the good ones, which on your platform, I know you do all the time.
It's fine, but I mean, I'll admit I may miss something. It's very likely, I would say, not only possible, it's likely. It's just, it's getting more and more difficult. I've hired somebody to help me, and hopefully there'll be more of that. But there are a lot of public companies, probably way too many, but some of them I'm sure are better than we think, and a lot of them are probably worse than we expect. It's
a good example, though, gentlemen, that doing your homework and finding fundamental value can, regardless of the sector, can reward good dividends on any stock picking.
Yep, for sure.
Yeah, I couldn't agree more. And you know what? It's one of those times we're going through, I wouldn't say a slow period. January's been pretty nice to see things start coming back together in January with the indices as well, just overall market. But I think there's more of these. There's more of these down in the roughs, and I think a lot of them right now are in the United States because there still isn't enough eyes looking over there. So I know you have shifted your focus. Your focus has been there for a long time, but really started pounding that hammer as of late. I think that's correct, because I think there are a lot of companies where you're like, what do you mean this company's doing $20 million in revenue a quarter, and they came out of nowhere? So I'm looking forward to finding more of those, hopefully before everyone else.
So a company like C21 or one like that, one of these diamonds in the rough, there's not only the exit strategy of other people learning about it, I mean, there's a voracious appetite for M&A here. So to the extent somebody can put together a portfolio of assets that appeals to another strategic buyer, there's a quick exit strategy. So that'll be interesting too. And I think when we start to see some of that, people will spend more time on some of these smaller, less known companies as well.
Yeah, and that's a great point as well, because they're going to start looking for people to start swallowing up so they can grow faster, kind of an ACB model or Aurora model where they're out there, and that's exactly what they're saying they're going to do. They're going to go out there, they're going to grow through M&A, and I think that's still yet to come. It's exciting. There's a lot of companies out there. We just got to try to hopefully find them before everyone else does.
Yep. As long as the M&A transactions are accretive, and we have had an adjustment in some of the stock values, both the target companies are cheaper, but also the potential acquisitors' share prices have pulled back a little. So as long as it's accretive, the market will like it.
Yep.
Absolutely. Well, Alan, always a pleasure. I've watched your work, read your stuff for about 1.5 years, 2 years now. Always a lot of good information there. I appreciate very much. All of our visitors right now, you can go to newcannabisventures.com, see all the work that's going on down there as well, and 420 Investor as well.
Thanks for having me on, guys. Enjoy the rest of the week.
Nice to see you, Alan.
Take care. And thank you very much for that, Alan. Always a pleasure. Been in this space for a long time. Lots of great knowledge there. So thank you very much for coming on the show. Speaking of show, today is over. We're getting ready for tomorrow. And tomorrow, just to clear up something, we are having the new CFO, Landon Rodin, coming on for Evenco. Not the new CEO. Melinda's still there, still doing a fantastic job. We have the CEO of Fire and Flower coming on tomorrow, the CEO of Faircourt Asset Management and UIT Funds, and of course, you all know him, Midas Letter's lead financial writer, Ben Smith, is coming on the show as well. I hope you enjoyed everything today. Thank you for our host, Stephen Misener, as well, for coming on. And for all of you, we always appreciate, keep those comments going in the comment section. Send us some information. We're always looking to get better. Give us your feedback. Keep watching. We will see you tomorrow. I won't be here, but there's going to be some great people there. I will see you on Wednesday for FTMG Live. Have a good day.